This is my market and trade update for the week ending April 10th, 2015. Markets had a nice advance this week, taking out the prior week's high. Markets overall basically have been range bound for the past 5 weeks or so. The main reason for their nice rise this week was due in part to the not so good jobs numbers that were reported last Friday, as well as the realization among market participants that the Fed is now likely to raise rates later in 2015 versus the speculation that they would raise rates earlier at the June meeting. Okay, so next up, it's a weekly chart of URI. I closed this position on Thursday for a 7% win. I held the position for around 3 weeks, and it's the first trade of this cycle that I've actually closed. All my other trades that I've mentioned in the prior videos are still open. Okay, so now I'll go through my strategy as to how I found this idea. What basically caught my eye was that hammer candlestick that had formed around 3 weeks ago. To me, that indicated that buyers were stepping in, and that the price was going to stay above that long-term trend line that I've drawn on the chart that goes back weeks and months. And my strategy primarily uses weekly charts, which does take some degree of patience for the trade to run its course. But I believe that the setups they're all quote unquote high probability setups. So my price target for exit was 7% advance to when I first entered, and I entered the trade at around $88.20. So I was targeting to get out at the descending 20-week moving average, which is the red line shown at the chart, and that corresponds to exit price between $94 and $95. And so finally on Thursday, the price hit that red line, and I got out of the trade for a 7% win. Okay, so next it's a weekly chart of the China ETF. You can see this week it had an extension of the breakout. It's a very, very impressive move. It's up around 20% for the year. My only exposure to China is Baidu in my current portfolio. It's currently profitable, but I think this shows it's a visualization. It shows the strength of emerging markets now that market players believe that the Fed is not going to raise rates at the June meeting, and perhaps not until later in the year. Just to finish my update with a heat map of the market sectors, so the best performers this week were energy, technology, healthcare made a resurgence, financials and utilities were the laggards for this week. I'm currently in all the other positions that I've mentioned previously on Twitter and in my prior videos. If you're interested in following some of my ideas, you can follow me on Twitter at DeconstructMad.